earnings impact, the Fed, a number of other factors influencing the markets, with Eugene Profit, President and Portfolio Manager at Profit Funds. Brings a value approach to investing, follows most of the big names in the market. If you want a second opinion on a stock you're thinking of adding or removing from your portfolio, Eugene Profit's your answer man for the next hour. You can give him a call. The number is 1-800-304-FNET, or you can send us an email. The address talking.stocks@cnnfn.com. So Eugene, how are you looking at this market? I mean, we're up 6-week high. We're in positive territory again on NASDAQ today, so it's a new 6-week high.
Right.
Have we bounced? Are we going into more strength in technology?
Well, I think we're going to go into more strength in technology. We have had a great bounce where the last actually a first with the beginning of the year. So a lot of the sectors that were down in the fourth quarter were up in the first quarter, and I think a lot of portfolio managers might have missed some of this rally. I think we're going to level out here a little bit and begin to continue to digest earnings, and then we'll probably take a rest, see what happens with the Federal Reserve next week, and then move higher.
Now, you know, we talked about earnings a little bit, and this has been, I mean, mixed but not horrible.
Sure.
There was some time when the street was a little more nervous about this reporting season than as we've gone through it.
Right.
Where does this leave us, and what makes it different when we're through earnings season than when we started?
Well, the big concern I have is that we had a lot of earnings depression over the last quarter, where you had companies come out and warn earlier, and now they're actually beating those lowered expectations, and I think some people are missing that. The good news is that companies are beating the higher range of their lower expectations, which is a positive. I think that analysts have got the earnings expectations in line now, and I think we will go ahead and move higher, assuming that the Fed continues to help us here.
We hear tomorrow, of course, Alan Greenspan up on Capitol Hill, little testimony before the Senate Budget Committee. We're expecting to hear something in terms of rate hints. What are you looking for out of Greenspan tomorrow?
Sure.
And then more broadly, what are you looking for from the Fed as we go forward?
Yeah, I think the Fed has made it clear that they're on our side. They're going to go lower. Now, I think that we probably will see a 25 basis point move, and I think that's probably because the market has actually accelerated a little bit more than we would have expected from the previous cut. We knew that their earnings numbers would be a little bit ugly. In some cases, they haven't been as ugly as we had expected, but I don't think there's enough evidence out there for them to go ahead and reduce 50 basis points here. I think they'll go more with their conservative 25 basis points here, another 25 basis points before the end of March.
And that then leaving them more room to cut further later if they need to?
That's right. I think they might continue, you know, another 25 basis points before the summer. It's going to be a factor of how much companies are able to weather this recessionary type earnings slowdown. And I think that companies have gotten it in line, analysts have caught up, but we can see some exogenous shocks that we aren't expecting. Like, we don't know yet what impact California is really going to have with the energy crisis on GDP. When they're 12% of GDP, if we don't get this resolved soon, there will be some impact, and you'll see adjustments begin to happen, you know, going forward because of that.
That's an interesting point. We'll get back to some other things for investors to be concerned about.
Okay.
But first of all, we're going to go down to the NASDAQ, where Fred Katayama is, and he can tell us about what investors are looking at down there today. Fred.
Well, Bill, we were up much higher today. We were up as high as 28.92, but the big caps have given back a lot of their gains, especially on the telecom sector. Right now, the NASDAQ is up just 9 points at 28.50. Earlier, I was talking with the chief strategist at IDEA Global, Seth Martin. He says there's going to be a cap on NASDAQ trading because a lot of investors are cautious ahead of any comments that Alan Greenspan will make before Congress in his testimony tomorrow. And so we've got, you know, sort of volatility in the NASDAQ. We've been up for most of the session, but it's been giving up its gains over the past hour or so. Taking a look at them, computers are leading the way higher. It's up 0.9%, and biotech stocks are up a little more than 1%. Let's take a look at the big caps. For the most part, they're trading up. Intel leading the way, although right now it's up just a fraction at $36. Let's move on over to Cisco Systems. That stock has been dipping in and out of positive territory. Right now it's down just a fraction. Cisco announced a brand new product today, a product called Aeronet 350, a wireless broadband network that's being deployed by two customers, Microsoft and University of North Carolina, Chapel Hill. Moving on over to Sun Microsystems, that stock is up a fraction at $32.50. Now, Sun Microsystems settled a 3-year-old lawsuit with Microsoft Basically, this calls for Microsoft to pay $20 million for limited use of Sun's Java programming language. Now, earlier in the lawsuit, Microsoft had contended, or rather Sun had contended, that Microsoft had modified the software so it would only work with Windows computers. As for Microsoft, it is up as well. It's up $2.06, trading north of $62. Basically, both stocks are up just about the same in percentage terms. Finally, Oracle, showing weakness. It's down 48 cents, trading at $31. As for breadth, it's positive. We've got advancers beating decliners by 19 to 16. Bill?
Fred Katayama down at the NASDAQ market site. Thanks, Fred. And we are back talking stocks with Eugene Profit. Now, when you look at the economy more broadly, a lot of debate in terms of soft landing, hard landing, when we're going to know about this. How do you see this? How do you look at this? And how should investors be looking at this right now?
Well, I think the major issue right now is really the beginning of the Bush administration. We know that we're in a soft landing. Some people do think that we're in recessionary hard landing. That'll play out over the next 2 months, depending on whether or not GDP growth expectations are going to be lowered even further than they are now. They're around 1 to 2%. But the issue is, with the Bush administration, you have a new paradigm going on. We don't know yet what the policy is actually going to have, the impact on the economy. We know that he's looking to reduce taxes. Usually you're going to see a 2-quarter lag to a stimulative effect on the economy from a tax cut. And so we don't know whether or not that aggressive tax cut is going to really help us or hurt us. And we won't know that really until the next 3-4 months.
And is that, I don't know, in terms of driving other aspects of this economy, and my guess is consumer spending.
Sure.
For one.
Right.
What sort of an environment are we moving into?
Well, you're moving to an environment of lower rates and lower taxes, so the consumer should have more money in their pocket, so you expect consumer spending to go up. But we still don't know yet what damage is already out there in the marketplace. I think now people are really looking at the impact of the declines in their portfolio from the 4th quarter.
You know, and we talk about psychology sometimes. What about this whole aspect of people getting their 401k statements in the mail, opening them up, saying, oh my God, you know, honey, we're going to cut back a little bit here or there. I mean, that's, as that plays out, as the ripple effect goes through, how much of a concern is that? And is there a way for investors to play that to their advantage?
The surprising thing, Bill, is that the psychology right now is that the market wants to go higher. We thought at coming into the year that the market would tend to want to go lower, primarily because as investors looked at their portfolios, they would feel less wealthy. They'd feel like they had less return last year, which they did. And so we thought that more people would be leaving the marketplace. However, we haven't seen that. We've seen money going into the telecom sector. We've seen money going into the technology sector. We've seen the economy going higher. We've seen the stock market going higher. I think what investors should do to play this is going to be stock by stock. You have to look at companies. You have to see which companies are strong in their industry, in their market space, and you have to pair your portfolio away from those innovative companies that looked good last year, but that innovation may not pan out. You know, that bubbles burst. We need to go back and look at the market leaders and go ahead and let those market leaders begin to expand their market share.
We're going to be back. We're going to be back with some more specifics with Eugene Profit. Some of your questions, some of your phone calls. You're watching Talking Stocks on CNNFn.